Are you too old to start a policy to use for the infinite banking concept? Well, stick around to the end of this video and we'll give you all the reasons why it's never too late to start. Hi, I'm Olivia Kirk.
And I'm Tim Yurek. We're from Tier 1 Capital and we're here to help you regain control of your money.
For the best advice on regaining control of your money, please be sure to subscribe to our channel and don't forget to hit the notification bell to be notified when we upload new videos. We get asked this question every day.
And it's really relative. People say, am I too old to start the infinite banking concept? People in their 40s say, I should have started this 20 years ago. People in their 60s say, I should have started this 30, 40 years ago. Well, the fact of the matter is, unless you're done buying things, you're not too old to start using the infinite banking concept. Why? Because the infinite banking concept puts you in control of your money. It eliminates the banks and puts you in control, meaning that you make the profits that the banks would have made.
It's like the old ancient Chinese proverb.
Exactly. The best time to plant a tree was 20 years ago, but the second best time is today. So therefore, you're never too old to start the infinite banking concept.
When someone comes to us and asks if they're too old to start an IBC policy, what they're really asking is the cost of insurance too high for me?
Exactly. They associate being older with a higher cost of insurance, which is absolutely correct. However, there's a couple things going on here that sort of cancel each other out, and then there's an advantage that makes it better. So understand this. Yes, the older person is going to pay more per thousand of life insurance coverage than the younger person. There's no way around that. However, the insurance company, because that person is older, has to reserve more money sooner in order to make sure that they're able to pay the claim. So those two issues cancel each other out. The higher premium is canceled out with a higher reserve, which, by the way, infinite banking is all about the reserve or the cash value. But there's a third piece going on that makes infinite banking actually more attractive for older people. And that is the fact that they're more likely to die. And because they're more likely to die, there's a probability that the cash flow management tool that you use to buy things is now going to pay off in a tax-free death benefit.
Think of it this way. The life insurance company reserves more for an older person.
Basically, they're willing to pay more to the older person to surrender their policy.
Let's look at a practical example. Let's compare an insurance policy on me and Tim.
So Olivia's 29, I'm 57. Let's say we wanted to buy $50,000 of life paid up at age 100. Well, the premium for Olivia is going to be much lower than the premium for me. But the amount that the insurance company has to reserve for every annual premium that's paid is going to be greater for me than it will be for her. Why? Because they have 71 years to reserve for Olivia and only 43 years to reserve for me.
So it certainly makes sense that your policy would have more cash value quicker than my policy would.
Exactly.
Let's take a look at how Nash, the author of Becoming Your Own Banker, addressed the very question, am I too old to start this?
Nash was 52 years old when he discovered this concept. And his situation was such that he was buried in debt and he was looking for a solution to the problem that he had created for himself with the banks. At that time, he also knew that he was paying State Farm Insurance Company about $400 per year on a whole life insurance policy. And his cash value was growing by over $800 per year. And it was then that he realized that was the solution to his problem. He needed to get his premiums as large as his mortgage. And if he did, he'd be in a great position financially. And it was at that point that he started to get as much insurance as he can on himself, his family members, and anybody else whom he had an insurable interest. At one point, he had over 44 life insurance policies.
You see, Nelson knew that owning the cash value in those policies was as close as he could get to owning his own bank.
Exactly. Life insurance is not an investment, but it is a vehicle that you can use to become your own bank. It is a vehicle that you can use to manage your cash flows and pay the profits that you would a bank back to yourself.
It took Nelson 14 years to get rid of the need for a bank in his life. After those 14 years, he borrowed against the cash value in his life insurance policies and never needed to borrow from a bank again.
Remember, life insurance is not an investment, but it is a great tool to be used to become your own bank. It is a great cash management tool where you can manage your cash flows to rid yourself of the need and the control that banks put on us. So basically the question is, do you want to be controlled by the banks, or do you want to be in control of the banking function? Whole life insurance is the ideal cash flow management tool. Let me give you a practical example. We have clients that started a business 20 years ago. At that time, they borrowed $2 million to capitalize their business. They used that capital to generate profits. They used the profits to pay back the loan. 10 years after they started the business, the loan was paid off and they decided to expand their business. They went back to the bank to borrow another $2 million. But the question becomes, whose money did the bank give them for the second loan?
Well, basically, the bank gave them back their $2 million and charged them interest and a fee to do so.
Exactly. They were not in control of the process. But understand, with infinite banking, you are in control of the process and therefore in control of the profits. They broke the debt cycle, which was borrow from a bank, capitalize their business, generate profits, and then use those profits to pay back loans. Now, they're borrowing against their cash value, capitalizing their business, generating profits, and using those profits to pay back to their policy, their bank, to generate profits for themselves.
In conclusion, you're never too old to start using the infinite banking concept. You may not be able to get a policy on yourself, but there are certainly people in your life who you could insure, and you could own that policy and control the cash flow in the policy. If you'd like help designing an IBC policy to meet your needs, visit our website at tier1capital.com and schedule your free strategy session. Also, if you like this video, please give it a thumbs up and don't forget to subscribe. Also, leave us a comment down below and let us know what questions you have about the infinite banking concept so we could answer them in upcoming videos.
Thank you so much for watching. Remember, it's not how much money you make,
It's how much money you keep that really matters.